step is just to get pre-qualified so that you feel real comfortable with what loan program might work for you and what payment and what purchase price. If you see a home that's in tough shape, maybe it's a repossession or some kind of, you know, something that's been beat up a little bit, a renovation loan might be a good way to buy a house at a lower dollar amount, roll in the cost of repairs into the purchase.
Credit score. Hurdle number 2 is your debt in relation to income. And then hurdle number 3 is your funds to close. So we're making sure that you're kind of good on all 3 of those hurdles. Types of things that we're going to be asking you for are 2 years of residency history. So, you know, have you been renting? Have you been living rent-free? Just going back 2 years. We'll also look back 2 years on employment. You know, are you a W-2 employee? Are you self-employed? We'll ask you questions about assets, so your checking and savings accounts, maybe if you have mutual funds, retirement accounts, we want to know those details. Do you own any land or other property? Have you had a bankruptcy, previous foreclosure? So we kind of get a big picture of your whole financial situation. We haven't necessarily validated that information, but based upon the information that you've given to us, we can pre-qualify you for a certain scenario, okay? So that's kind of pre-qualification. When we're having that appointment with you, we're gonna be wanting to know things like, you know, what monthly payment are you comfortable with? And then where we qualify you, is there like a gap? You know, are we able to maybe qualify you for a payment of $2,800, but then you only wanna do a $2,400 payment, and then we can have that conversation about what kind of techniques can we potentially look at to get the payment more in line with what you're hoping for. So the way that you can prevent bad things from happening during your loan process is by getting all the documentation to your lender up front.
How we pay taxes in South Dakota is different than other places, so they get very misleading. How much money you bring to closing can be very misleading because they don't understand our markets like we do. Like, I mean, we see the same title companies. Like, we know probably within seconds, if you tell us a price, what the fees would be. If you go to like Quicken online, they use a generic closing cost template that they use, and it's probably going to either scare you or mislead you the wrong way on how much money it's going to take to come to closing. Right. In our market, you know, the seller pays the owner's policy, the buyer. But if you go to Sioux Falls, it's different. If you go to Wyoming, and so if you're going to buy in this market, I'm not saying you have, but get a quote from a local lender. I think you're going to see some of the closing costs a little more accurate for what this market is. People that are not from South Dakota will give a quote and they'll have like $80 a month for insurance. I'm like,
Yeah, that's not gonna be.
no, we have hail.
We have
Doesn't
wind
work
and
out.
hail.
As a household, you can only make this much money. Oh, we didn't know that your wife gets alimony from her ex-husband. You know, those are the things that come up in underwriting because we have to look at all of that. So the more we know up front, the better we can place you in the right program.